Welcome to another episode and the final episode of Commercial Property Roadshow, Helen Tarrant, this year in 2021. But here I am outside our Eagle Farm self-storage, which we've just got unconditional on, and we'll probably either settle this before Christmas or the first week of the new year. So this is a great accomplishment for our team or our community, because we're pulled together and we're doing this cash flow plus uplift deal together. But today, that's not the purpose of the video. The purpose of the video is actually about telling you about what's coming up in the market in the new year. For some of my viewers, you were part of my webinar on Monday, so you know what a little glimpse of what the end of this year is going to look like, what next year is going to look like. But the most important thing I want to share with you is that we're here to always show to you opportunities in this market, and what are some of the things you should be looking out at, what are some of the things to avoid, and what are some things not to overpay for. And this is very, very important, because right now the most important thing is that people don't overpay for commercial property. Because right now what we've seen is that there's been a huge compression in the yields, and here in Eagle Farm and around there, and I'm just going to turn my camera around. Okay, so you can see we've got some industrial there, and we've got some industrial sheds coming up here as well. So apart from that, we've got some industrial here. Just wanted to highlight that for you, is that, here we go. We've recently visited some of the similar sheds on the other side, close to the next lot of developments down, which is in Pekinba, which are yielding around perhaps a 5.5 to 6%. Now here in Eagle Farm, that's probably about 5.5. Now if we go to the other side, very similar type of properties on the other side of the actual airport, what we're actually going to see is they're going to actually be around the 5% mark. So there's an actual difference between one side of the airport to the other side of 0.5%. If you are not seasoned investors, how would you know that, right? A change in the area changes in terms of the yield of the property. So that is one of the things to look for. Now, what I predict in 2022 with the market opening is that we are going to see industrial properties in Brisbane yielding around 5%. We are going to see that because there's such a flavour of the month, there's such strong demand for the purchase of them, that we're going to get them at 5% in Brisbane. Now compared to Sydney at 2.5 to 3.5%, that is still a bargain, but it is actually, for me, coming to my baseline of how much I would do in Brisbane right now. So next year, if you are looking industrial, my personal advice is don't do Brisbane, don't do this part of Queensland. There is regional Queensland, fringe Queensland, when you can still do industrial, get reasonable yields, potentially maybe even looking at going back into more of the metro areas like Sydney and Melbourne. Look, when there becomes only a 1% difference between Sydney and Brisbane, and Melbourne and Brisbane, I would go back to those metro cities. And what I would predict is in about mid-2022 is that the confidence will come back for your tenants. They will be more willing to sign longer leases. Perhaps retail would be another 12 months or so. And what we're going to see then is we are going to see more and more people wanting to have longer leases, therefore more confidence coming back into investing into the metro areas. And as such, we're going to see the yields in Sydney and Melbourne compressing a bit more, but more investors coming back there and actually ditching a bit of Brisbane and metro Queensland. So hopefully that would actually give some yield recovery, and if that happens, we'll come back. If you're one of our clients, we'll bring you back into the market. But right now we don't see any reason why you should be competing with everybody else in this heated market. But where I see the opportunity is potentially properties that are vacant, not quite right, or properties that needs a doer-upper. So we've been exploring some ideas of buying vacant commercial properties that have just been built. So they're a good opportunity. The difference between being a tenanted and then flipping that and creating some kind of equity in between is one option we're exploring. The other option is actually developing from scratch, which next year we will be bringing to our group, is basically finding land, doing the development, so that you can be ahead of the game, because it's always important to stay ahead of the game. But what we're seeing how this year has ended is that in the metro cities, we are seeing that if you're in the office space market, you are getting a 5 to 6% yield. If you're industrial, you're getting the lower end of the yields. If you're outside of Sydney, you'll probably get 4.5%. You may get 4% if it's a really good tenant. And then if you are in the regional areas, you're going to get anywhere about 6% to 7%. And look, if you're happy to wait for industrial and you're happy to be competing with the rest of the crowd, absolutely that is for you. But just remember, if the market does correct itself, you've got nowhere to go. And it will flatten for quite some time, which means that your equity is stuck there as well. This is another one of the strategies we look at to insulate against. So I do think that we're going to have probably a 6 or 9 months run on getting really good yields for office spaces, and I know that a lot of people shy away from it, but for me, I actually genuinely think there's an opportunity there for you to get some capital gains in the back end, as well as getting into metro areas at a really good yield. So if this is your second time investment, or if you do think that office space will be the right investment for you, but you're worried about some of the risks and you just want to have someone to talk through it, then we're here to help you through and strategize to see if office spaces is right for you. But with the right type of tenant, any of your professional type tenants, a lot of them are already back in office spaces. What we're seeing is Brisbane is probably sitting around 6%, 60% in people coming back into office spaces in the CBD area. We're seeing 40% in Sydney, and we're seeing about 20% in Melbourne. But in the next 6 to 9 months, that will change, and we'll have more people coming back to the CBD. And in about 12 to 18 months, we'll see that fill up again. And we're going to see international flights. We're going to see international visitors come back, and all of that, it will start to change that environment again as well. So how we've seen this year end is that there have been people who have not wanted to invest in retail, have not wanted to invest in office space, have really been strong push to invest in industrial properties, but that has left a gap in the market for non-perfect properties. It has left a gap market for office spaces where you can get higher yields in a metro area, and it has left a space for retail as well. So even if you're in South Australia, if you're in Queensland, and if you're in Melbourne or Sydney or Brisbane and you want to invest in something that is slightly higher yield than the industrials that a lot of people are searching for, then perhaps think about investing into office spaces, because it's like a cycle. It will come back, and then you'll become the flavor of the month when people have done all they can with warehouse properties and they realize that then there's no more yields to be had, that the other commercial properties will come back. What we're also will see in 2022 is that there's going to be a lot more residential investors coming into the commercial property market like they've never been before. And the pure reason for that is there's a lot of compliance, a lot of new lending regulatory that is stopping residential investors, and they're going to find that their serviceability tapped out, so they're going to go into the commercial space, which means for professional investors, if you can go up in price point, you really want to, you really need to. If you can find 2 or 3 of other people who are your friends or colleagues who invest together, even better, so you can move further up in the chain. And then on top of that, if you can get to a point where you can find a property that is just not quite right, that the market doesn't actually want, and you work out a strategy of how to turn something the market doesn't want into something that the market wants, then you've got your gold, right? But how, and each and every one of these properties differ in different areas. So for example, if you are in a Toowoomba, for example, you need to buy vacant, you need to refurbish it, put a tenant in, and then find a purchaser who are willing to buy that at a 6% yield. But if you are in Sydney, that's going to be a different process. So people who pay higher prices may want a freestanding building. So your entry point into Toowoomba might be 600,000 to $1 million, whereas in Sydney you're at 2 to 3 million. By the time you refurbish it, you're looking at investors who are in that 4 to 5 million space, right? Now, if you're in Melbourne, you could get a lot of vacant office spaces in the CBD. It's still going to be, 1 to 1.5 million. You might gut it, you might put new partitions, you might get new tenants in there, and then look to sell it. So different types and different gaps in this market of what people are looking for. And obviously, getting something that is run down industrial in this market and de-risking it really does sell. But again, time, labor, what comes out on the other end is really important. And please don't delude yourself. If you don't have the time to do it, find someone who's going to help you to do it, or make sure that you have a property manager or someone in place who can help you through that process, because nothing worse than you buying something that you think you're going to uplift but you won't do it. So predictions for 2022, if you think you're getting into commercial property, get in early. The first half of the year is what I'm seeing where the opportunities will lie, where we're seeing that it's going to be the greatest purchasing and busiest period in commercial property. And what I'm going to see is some really great opportunities that will come up. There'll be things that people don't want in the market, and people willing to, and the vendors willing to negotiate. There'll be people in the market that are going to look at properties that may be undervalued in terms of the purchase price, may be undervalued in terms of the type of tenants that's in there that's wrong, may be undervalued because the property is simply not being loved or taken care of, and these are where the opportunities lie. But if you do your metrics and your calculations wrong, you are going to basically lose thousands or hundreds of thousands of dollars on it. But if you do it right and you have the right mentorship and the right strategy behind you, you are absolutely going to win out of this deal. So 2022, better be in better earlier than later, and because the yield will compress all the way down to 20 at the end to a yield where most people don't want to invest in that market. And I think that by end of 2022, people won't want to invest into the Queensland market because the yield is going to be so low, like Sydney and Melbourne. So there's no point anymore. I think there's going to be more people who are going to want to invest into regional. So if you want to invest against first half of the year, and I think there's going to be new areas in regional that will pop up, new areas in fringe metro that will pop up, new areas in fringe regional that will pop up, that will become great yields, great opportunities. So watch this space, because I'll be bringing that to you, because next year we'll be able to be on the road a lot more, and I'll be able to share with you where I'm going, where I'm traveling, what kind of returns, and show you the properties that we're doing and what we're thinking. And sometimes it is the harder deals that deliver the fruit, and you have to work months and months and months to get the deal done. So if you need someone to help you with your commercial property strategy, reach out to me. We can schedule a call during the quieter times, a quick call just to touch base, and then we'll deal deeper in January. You really need to line up your ducks now if you want to be purchasing property in the first half of 2022. So until then, have a great Christmas, have a great new year. Reach out to me, helentarrant.com or helen@commercialpropertycashflow.com.au. Watch out for all the new listings that will come up in end of January. Be prepared for February. Look, when you are, and also one more tip, and people always ask me about Western Australia, about Tasmania, compare their yields to what you get in the mainland. If the yields are only 0.5%, the risk is too high, and you rather invest in the mainland. If it's more than 1 to 1.5% more than what you get in the mainland, then it's absolutely worth looking at investing in those areas. Look at your population, where the population growth is, look at the industry, look how things are traveling in that area in terms of growth, and also look at how much residential development is happening. Look at those metrics when you're looking at investing into the future. If you don't know, reach out to us again, helentarrant.com, and I'll see you in 2022. Bye for now.